Hey, everybody. Monday night, Lisa Copeland, Conquering the Shift. I have been listening to one of the best Twitter rooms that I've listened to in a really long time. And that was my good friend Grant Cardone in there. And with over 500 people in these Twitter rooms. Is anybody else as obsessed with Twitter nowadays as I am? I'm going to wait for everyone to jump on here. If you love Twitter as much as I do now, put a heart, put a thumbs up, put something in the comments. I'm telling you, I can't even get off of it. Elon Musk has definitely upped the game on the Twitter action. Clubhouse is essentially kind of dead, and Twitter is all the rage. So it's pretty exciting. But we're not here to talk about Twitter tonight or my obsession with Elon Musk and everything he's doing on planet Earth. Tonight is Conquering the Shift, and I'm going to do something a little bit different than I've done before. I've actually made slides. So I'm going to talk to you guys for a few minutes right now, but then I'm going to take you through my slide deck. This is a topic that's really near and dear to me, and it's really important. And I put it out there that if you are a woman, you need to be watching this. If you know a woman, you need to send this to her. You need to tag her in this. You need to share this out, because I'm going to be talking about the financial gap, the wealth gap that women experience during their lifetime. Now you're asking me, oh yeah, Kristen, she's stuck on Twitter. Oh my God. And so people are asking me why all of a sudden this? Well, it's always been this. Any real money I've ever made in my whole life, my career, I've done very well. I've been very successful, but the biggest blocks of money I've ever made in my life have been in real estate. Right? It's not owning a car dealership. It's not doing anything other than being involved in real estate, in the selling and the purchasing and the selling of real estate. Right? I sell real estate for a living now. I make other people very, very wealthy. I've got a lot of investors right now. I've had a really good year, but my investors are going to have even a better year. But where I'm really, really committed, really, want to get into is the wealth gap. Now, we talk about with men and women, that women have a wage earner gap. This to be true or not true, I know it is in some industries. I don't see it in mine as much, because 67% of realtors are women. And if you're successful in real estate, I've got the opportunity to make the same amount of money as any other realtor on the planet. So I don't think we see the disparity in that, but we do absolutely see it in other industries. And I understand that. I saw it in the automotive industry. So anyways, but women will earn $1 million less than their male counterparts in their investment accounts, whether and their investments in real estate. And there's only one reason why. Because we're afraid to do anything with it, and we're afraid to let go of our money. We want to hold it in cash accounts. We don't have good counsel. We don't have a good real estate professional that is out there every single day hawking, looking for deals. So there's an absolute wealth gap, and that's what I want to address tonight. And many of I had a great conversation today, a scheduled Zoom call with Ryan Secco, president of Cardone Capital, and Elena Cardone, the three of us, and just us masterminding some of the things that we're going to be doing in 2023. Also, I think you all know that I've got two major sponsors for our road tour, for our road trip to go out on the road. And, these are important conversations to be having now. The stock market has proved to us that it's an epic fail, right? You put your money in the market and you're going to lose it, right? There are things that are out of your control in the stock market, like earnings and PR and things like that. But with real estate, if you hold it long enough, you will always make money. Just remember, I told you that on this day. If you hold it long enough, you will always make money. It's very hard to lose money on real estate. If you have a great real estate professional who is out there looking for deals, who understands the market, who understands cash flow, who understands NOI, which is net operating income, knows how to help you underwrite a deal and put an investment in place. So again, I'm going to digress from how I normally do things, where I just sit here and talk, because I did the slides. Like, it's really important to me. You guys are going to be seeing this is most of my messaging coming out in 2023. We've got big stages, big events to have, because I want to help women. I want to do what I've always done for women, right? But when I found out the data that I'm going to share with you tonight, a lot of it I already knew, but the wealth gap, I was like, I'm going to help close that gap. And I'm going to train my team, and a lot of my team already knows how to do it, but we are going to be about closing the wealth gap for women. We're going to help women build generational wealth through real estate. And yes, guys, we'll work with you also. All right, so here we go. Let me get this into my stream here. Look at that. Look at me. I actually did it right. I actually practiced prior to. So what we put together for our speaking tour is the WOW Network. It's the Women of Worth Network. And really, it's the women of net worth. And it's whether you have net worth now or you want to have net worth. You know, we are the group, we are the people to work with. And my agents out there, I want you to learn, because I want you to have the talk tracks to be able to, number one, start doing the research yourself, but number two, going out there and helping your clients build net worth. Because see, I talked about this last week. We're going to have to change the narrative. All right. You read the press and it's just terrible, right? It's just the world's coming to an end, this, that, and the other. Okay, guys, they have a 24-hour news cycle they've got to sell. Do not believe the press. I think Elon Musk has proved to us over the last few days that, you know, they're not to be trusted. You need to come to your own conclusions. Okay. You need to come to your own conclusions, meaning you need to do the research, and then you need to surround yourself with a team of experts. And we are experts that do this every single day for a living. This is not my part-time job. I'm not a part-time agent. I don't have a day job at the tech company, and then I sell homes on the weekend, right? This is what I do every single day. I meet with experts every single day so that I can up the game for my clients. And I've made my clients this year millions and millions of dollars. And I'm really proud of that. And I'm not going to apologize for it. Just shared this with a bunch of rock stars. Corey, thank you so much. So let's keep going here. So this presentation tonight, it's bridging the wealth gap through real estate, right? If you're just tuning in, women have a $1 million deficit. So the future of wealth is here. By 2030, women in the US are projected to control as much as 30 trillion in financial assets that baby boomers will possess. Women are also the largest beneficiaries of the current transfer of wealth, living an average of 5 years longer than men. So we say it's fun to live 5 years longer than our husbands, but you know, that comes with a whole nother set of responsibilities, right? The longer you live, the more, you know, you're going to get involved with healthcare and having healthcare costs and concerns. But the largest transference of wealth is happening right now, and it's in the trillions. And I already know how this story ends. So it's like I want to talk through it now and tell you how it ends, but I'm not going to. I'm going to make myself follow my slides, because I very methodically put these together today. Give me a heart, like, if you like my slides, because I did make these. I did not send them out to my assistant. Women control a third of the total U.S. household financial assets, yet have often been overlooked by the financial industry. What does it really mean to empower women investors? So I find this really interesting. You know, this takes me back to my car business days, where women control 85%, women influence 85% of all household purchases. But when she'd walk into the car dealership, nobody would give her the time of day. I'm like, she's writing the check and she's making the decision. Really? We're going to ignore her? Okay. When it comes to women investors, the same thing is happening, because there's a majority of male. It's a male-dominated industry, the financial services industry. Real estate is not. Remember, 67% of realtors are female. But the financial services industry is male-dominated, and women don't tend to trust that as much. So what do? Not me. I put my money in the markets, you know, into real estate. But what do women do? They end up holding it in cash. Which again, I'm getting ahead of myself. So what is our problem? Okay, the problem that that we're going to solve, that we're going to be talking about in 2023. The gender investing gap is real, and it's just as damaging to women's financial health as the wage gap. Just as important for us to push for wage parity and workplace equity, it's equally as important for us to educate ourselves about investing, to talk about money and investing, to take control of our financial futures for ourselves and our families. The investing gap is 1 million or more over the course of our lifetimes or their lifetimes, the woman's lifetime. This disparity is even more pronounced given that women tend to live longer than men and incur greater healthcare costs in retirement, right? Like, given the same pot of money, all right, a 35-year-old man and a 35-year-old woman, he will make, if he lives to be the average age of 78 years old, I think it's 72 for men and 78 for women. If they live that average lifespan with the same pot of money, it's $1 million wealth gap, y'all. Why? And part of it is because people like me aren't sitting here talking about it. That's why this message it's critical. Tag your sisters, tag your mothers. Anyways, I have some opportunities at the end. Women keep almost 70% of their portfolios in cash, right? We don't like to give up the money, right? That's a stat from Fortune magazine. Well, I don't know about you guys, but cash paid less than 1% up to about 6 months ago. I think you can buy some treasuries now for 3 or 4%, something like that, short-term treasuries. Who cares? Like, it's nothing like real estate appreciation. I talked to you guys and gals about this last week. Real estate nationally appreciates at about 5.8%. But if you're in my market, if you're in the Central Texas market, that appreciation number is probably double that. Average appreciation, right? Compound appreciation. Not only is your asset, your house, when I talk about the asset, it's the house. Is the house appreciating, that the asset's appreciating, but you're able to take some tax benefits. You're able to take, some great write-offs on it. You're able to have something that you can sell, right? Something that you can leverage later on that you cannot do when your money is sitting in cash. Because at the interest rates that our bank accounts are paying, right, our money is declining. The only way to outrun inflation is to put it into real estate, right? Our money will be worth less today, or excuse me, a year from today than it is today. Who knows what that number is? But during COVID, I think that we printed, I don't know, double the money from the Treasury Department. The number, it's just ridiculous. Cash, green money is worth nothing. It does not have anything. It isn't even backed by anything anymore. So what are we going to do with our money? We need to put it into an appreciating asset that can outrun inflation. And that only asset that I know of is real estate. Okay. Whew. Just drinking my water here. Lots of ways to buy real estate. Ryan Secco and I talked about this today, president of Cardone Capital. Using your IRA to buy real estate. You can hold your real estate in your IRA, and you can use a self-directed IRA. You can set up a self-directed IRA. So versus just having it sit there and be all in bonds and funds and this, that, and the other, you can actually self-direct it to purchase real estate assets. All right. Any real estate property you buy must be strictly for investment purposes, and you and your family cannot use it, right? So, it isn't that you can use it to buy your homestead, but you can use it to buy multifamily, anything that you're going to use as an investment property. Then when you go to sell that property someday, you can actually shelter the gain, the taxes on that, by rolling it into a 1031 exchange and buying another one. Right. So, you're taking an asset, you're taking a large amount of money, and you're able to shelter the profit from the tax man. Nothing else you can do that with except for real estate. Ladies, are you taking notes? So the stats. Women are poised to inherit a large share of the 30 trillion that will be passed down from the baby boomers. At the same time, women are increasingly building wealth on their own. As wealth management landscape shifts, financial advisors, most of whom are men, need to accommodate the growing and unique needs of women. Women tend to be more focused on life goals than men, are less comfortable making finance-related decisions on their own, and have less tolerance for investment risk. Okay, don't start blowing me up, ladies, okay? I'm one of these people. I will put it on the line. I buy stuff. I flip stuff. Anyways, so, we're not all like that, okay? But it's the 80-20 rule. And I would really challenge all of you out there, how much of your, when you go and you put together your personal financial statement, how much of your assets is sitting just in cash, just cash money sitting there because you're terrified to put it into the market. And I'm here to tell you, you don't need to be terrified to put it into real estate. Real estate will not fail you if you've got the right professional that knows how to acquire an asset. And right now, folks, real estate's on sale. Okay. I talked about this last week. Everyone's like, oh, the rates have gone up, so I don't want to buy real estate right now. And I'm like, oh my God. Okay. The rates have been on sale for 2 years. They have been at an incredibly low rate, not sustainable, all of that. But now the asset has gone on sale. And I'm sorry, give me a 20, 30, 50, 60, 80, $100,000 path to be able to acquire the asset for that much less, for less money. And I will take that all day, every day, right? The money's made at acquisition on anything you buy, whether it's a car, whether it's a house, whether it's a boat. The money's made at what you acquire it for. Okay. Because that becomes your cost basis. And then from there, everything is profit. So the less that you can acquire an asset for, the more money you'll make someday when it's time to sell that asset. And like I said, when you get into the investment game, you can actually shelter the taxes on that asset and reinvest through a 1031 exchange into the next asset. Guys and gals, it is a beautiful thing. I've got some incredible off-market investment opportunities. I digress, but I'm just telling you, we have them. So let's just talk about women and spending. Many of you know I wrote a book in 2018 called Car Buying Her Way. And so I did a lot of research about the female consumer. And here are just some of my stats from them, that women make up half of the US population and control or influence 85% of consumer spending. And I know you're saying, okay, well, it's only half. How do you guys control that much? Because somebody like me, right? I've got kids, I've got grandkids, and I've got parents. Okay. So chances are my kids talk to me before they make a major purchase. Most of the time they do. My mother talks to me about things that she's going to buy. My grandkids, I hope someday will. And so me sitting here in the middle, I help to hopefully influence their decision as to whether they're going to move forward. That's why. So, whether it's a single guy calling his sister, or a single guy calling his mother, his grandmother, his aunt, whatever. But many times, men do go to their millennials. They go to that female leader or influencer in their family. The purchasing power of women in the US ranges from 5 trillion to 15 trillion annually. Women control more than 60% of all personal wealth in the US. Now, just take that one in for a minute. If we control 60% of all personal wealth in the US, why is there a wealth gap of $1 million? I'll tell you why. Because we hold that wealth in the bank. We're just letting it sit there and deflate. I don't know if that's the right word, but with inflation, our money is deflating. Okay. And the only way to keep up with this insane rate of inflation is that you've got to put it into real estate. You've got to put it into an appreciating asset. Stocks and the market are not appreciating assets. You can't control that. And I'm not saying you can control a real estate market, but you can control your acquisition price of that asset. And there's enough data, 5 year, 1 year, 2 year, 5 year, 10 year, that you can make a good decision, and you're going to be about 98% protected as long as you're working with a team of experts. Women purchase over 50% of traditional male products, including cars, home improvement products, and consumer electronics. And approximately 40% of US working women now out-earn their husbands. All right. Women, there's no reason. And I don't want anybody left behind on my watch. Put a heart in here. Put a heart in my comments if you are thinking about, or you're thinking, God, like, I need to get in the investment game. Multifamily, a fund, maybe a DIY program, like, right, do it yourself, learn how to invest. Like, Is this really hitting on anybody where you're like, I got to get into this game in 2023? Put a heart into the comments. Because, I mean, again, you're not going to be able to look up, this is something, once you've seen it, y'all, you can't unsee it. You cannot unsee it. It is time that we go out and we create wealth, and that we're not left behind, because in the wage gap, I don't know that we can fight it near as well, or I guess we can, but it's sometimes that's something that's out of our control. But what's not out of our control is to learn and to commit to get into the game at some level. Again, whether you're buying a duplex, maybe you're buying a single family home, maybe you're getting into a fund. I know of a couple of a really good fund that you could put a few dollars in and start earning some passive income. Maybe you want to get into a real estate investing group where you work with other people, and it's a do-it-yourself deal. Like, there's lots of ways to get into the game, but you've got to commit to get into the game in 2023. There's going to be some raging deals. I was just listening to Grant on Twitter. He's got a huge live stream going, and they're all trying to get Elon Musk into the room, but it's a real estate live stream, and amazing information is being passed around. But do you know who the majority of the experts are in that room? They're men. They're men. I mean, there's a female co-host, but and I didn't say anything. Elena was in there. She and I didn't speak, but I didn't hear any women speak up. A lot of men had a lot of really good information, though. I mean, Grant was taking notes at one point. Okay. So again, either we're not speaking up, or we're not trusting ourselves, or we don't have the right team around us. It's something. But I'm telling y'all, if you don't get in 2023, you're going to miss an incredible opportunity. Let's see here. So next, consumer purchases by women, 91%. So we account for 85% of consumer purchases. And what that should say is that we influence. So we influence 91% of new home sales. Shocker. I think I have bought, this is a true story. My husband's watching this. I have bought 2 houses for sure. Like, where I literally went home and said, I wrote a contract on a house today. We're moving. Like, that's a true story. And then the other ones, I've just said, hey, come over to this house. We're going to buy it. All right. He's never come home to me and said, hey, I want to buy this house. I take it back. Our place in Florence, he did that. Anyways, but that's just a second home, but not our primary residences. I bought 2, like, literally signed the contract and said, guess what I did today? I bought a house. And then the other ones, I've called him over and said, guess what? We're going to buy this house. Okay. So I know those to be true. Influence 65% of cars, 89% of bank accounts, and 80% of healthcare. Right. And then the stat that's not on there is education. Right. I always chose where my kids went to school and what was going to happen there. Always chose their doctor and healthcare. Like, women, we are so powerful when it comes to this whole ecosystem of being a consumer. But now we've got to take control of our wealth. We've got to take control of the wealth. Okay. I love this, right? If you're in the real estate, I see a ton of my team on here right now. I know other people from other real estate companies are watching this. Why do we want to work with female consumers? Because they are the largest referral source in the world. 92% of women pass along information about deals or online recommendations to others. And this is an example I gave to one of the sponsors of our tour. And I wrote about it in my book, Car Buying Her Way. If a woman is happy with your service, she'll tell on average 8 people. 8 people. She'll share it online. She'll call people. She'll text her friend. She'll send a picture of it. If she's unhappy, she'll tell 28. All right. So it's very important. She's a very important consumer. So there's that piece. And, the men are not near as likely to share the good news, because they like people to think, well, I got a great deal. I'm the, whatever, they're not going to give credit where credit is due. So the greatest consumer in the world to work with is a female consumer. And I think this is for my team. There's so much opportunity to help women get into the game in 2023. Let's see what Paige said. Paige is one of my partners out in Scottsdale, and she's an incredible agent in the top 50 globally. She and I both are. It's a big deal. Out of 86,000 agents, my girlfriend sells some houses. We're hearing that mid-March interest rates will go low enough that competition will heat up again. End of Q1 2023. Do it now, refinance later. If OfferPad sells in your area, hone in on those. Oh, good advice, Paige. Thank you. And Paige, I'm going to be seeing you in 2 days in Scottsdale. Super excited. Talk to Sharon Lecter tonight. But she's absolutely right. Like, what I have to give you guys the quote that I had from last week, and I think it's such an important piece of information, and it goes right along. Sorry, I gotta get to my notes. It goes right along with what Paige was talking about. Boom, boom, boom. About seeing the future. Oh Lord. Okay. I hate doing this when I'm live. I'm sorry. Oh, but basically, it's about seeing the future before it becomes obvious. All right. We're telling you what the future looks like. What happens when it gets obvious? The minute the rates drop, the prices go back up. Okay, that's just what happens. Rates go down, house prices go up. Rates go up, house prices go down. You want to buy the asset on sale. If you could buy it now, like there's a crazy window of what Paige is talking about. As rates drop down some in March, April, May, and I know that because one of the people that's sponsoring my tour just met with the head economist of Fannie Mae, and that kind of tracks with what they were saying. And so the minute that the market gets wind of what we already know, and of course we don't know anything for sure, right? This is the talk in the industry. But as soon as the market starts to get wind and get confidence, what happens is the prices will start going back up. You've got a really incredible time right now where interest rates are still good. I mean, they're in the sixes. So I think six and a quarter. My husband's in the mortgage business. Knowing that you can acquire the asset for 20, 40, 50, $100,000 less than you could have 9 months ago. You hold it for a year and you refinance it. Like it's a no-brainer. It's a no-brainer. Now's the time. So target audience really, and this is, the boomer women. Every fifth adult in the United States is a female over 50. All right. And guys and gals, she's got money. I have more money today than I ever had when I was 30 or 40. Why? Because I'm not paying for college and I'm not paying for all this other stuff. 50 plus women are the healthiest, wealthiest, and most active generation in history. 50 plus women control a net worth of $19 trillion. Over the next decade, women will control 2/3 of consumer wealth in the US and be the beneficiaries of the largest transference of wealth in our country's history. On and on, right? Like, have I proven to you over 30 million women 50 plus are the fastest growing demographic online? Women 50 plus spend on average 250% of what the population in general does. I'm going to say I'm one of those. Baby boomer women spend upwards of 20 billion a year on clothing and designer purses. And I know Angie Yates is going to write boots. So that's kind of an inside joke. All right. And the cool part is, and so many of these people on here are women, and on my team, I do have men on my team and some great men at that. But today, women represent the industry in the majority of the United States, making up 67% of realtors. And what's interesting is the typical realtor nowadays is a 54-year-old female who's a homeowner and college educated. And I don't know why I really put that in there. It doesn't matter. I don't care how old you are. Like if you're in the real estate industry and you're not dedicated to help break this wealth gap, like that's, and people on my team know this story. Like that sent me over the edge. It absolutely sent me over the edge when I learned that stat. I'm like, okay, I know what I'm doing in 2023. I'm going to make sure every woman I know has the opportunity to get into real estate and to get into investment. Like I can either crowdfund them, I can put them together on deals, I can show them deals. They can self-direct their IRAs if they don't want to take cash out of the bank. Like there's so many ways that you can get in. And now the best part is the assets on sale. The assets on sale. So, I feel like I'm going to be taking out everybody I know to a Barney sale, like Black Friday, because this is the closest thing in real estate to Black Friday that we've ever had. Love this by my good friend Grant Cardone. The real estate secret to success is cash flow plus time, meaning the time that you hold the asset. That means like you can't get in and get out, right? You've got to hold these assets for a minute. And really it's 5 years probably, plus location. All right. So everything is about location, location, location. Do not let somebody sell you something in a crappy location, right? Or in a location that is dying, that doesn't have new industry coming to it, new roads coming to it. Your realtor should be talking to the Chamber of Commerce. They ought to be able to tell you, hey, this town, like my town, Amazon's coming, and in Austin, Texas, Twitter's coming, and Tesla came, and whatever that looks like, right? So cash flow, right? That means we've got to make cash on the investment. It should pay you monthly. cash flow, plus time. You know, you have to give yourself some time for that asset to appreciate, plus locations, location, plus scale. And what he's talking about in scale is doors, right? Numbers of doors. You know, we're not really wild at all for investment properties to be a single door, right? A single door. I just closed one. I put it up on my Facebook. I closed it. I'm like, what is today? Monday, Friday. And it's a triplex, and it was $775,000. All right. And the rents on the 3 units are they're a little over $6,000 a month. Well, you look at a house that's valued at $775 in Austin, Texas. It's not getting a $6,000 rent. It's probably getting a $3,000 rent, right? So why are we getting so much more? Because we've got 3 doors versus 1. Anyways, I feel really good about that investment. This was a first-time investor, somebody who used to work for me, who really trusted me to, to find the right investment for them. And I feel great about it, right? It cash flows, number one. They have time to hold it. They're going to hold it probably 3 to 5 years. The location is close to a private university, close to I-35. And scale. They have not 1 door, but 3 doors, right? And I'll actually be going out there to that property and talking more about that. I mean, you guys are going to see me really take a big pivot in the conversations, because now may not be the time to, sell your house to buy the one next door or down the street or around the block like they were doing back when rates were 3%. But it's damn sure time to get into the investment game. Grant said earlier on Twitter, he said, the government's going to make us a country of renters, whether we want to or not. So I don't want to be in the class that is the renter. I want to own the building that's being rented. Think about that. Okay. I don't want to be the renter, and neither do you. You want to own the building that people are renting. And we can show you how to do that. We can absolutely show you how to do that. All right, let's see here. I think this is my last slide. So take a picture of this if you're interested in connecting with me. If you're watching this on the replay, or you're an investor somewhere and you're like, well, I don't live in Central Texas, Lisa. Guys, I got 900 agents on my team. I've got some of the best sharpshooter agents you've ever seen in your life all around the country. Connect with me. I will refer you to one of my great agents somewhere else. Okay, so I'm going to go off of the slides now. So I'm going to remove. Well, I'm going to give you guys a second to shoot that with your, take a picture of it. Again, I want to help you. I want to help you build generational wealth through real estate. And it's the only way. I mean, you look at the richest people in the country, right? The Rockefellers, and everybody. I don't know why I said Rockefeller, but it is the Rockefellers and the Trumps and everybody else, right? Where was the money made? It was made in real estate. They're real estate developers. They're real estate owners. They're apartment owners. They own multi-doors. I think about my friend Grant and Elena Cardone. When I met Grant 14 years ago, he was not a billionaire. Okay. He was really out starting to get into his first deals. And, I was I wasn't really a party to it, but I sort of was, because he had asked me for a referral for a real estate agent in Austin, Texas. And I gave him one, and he went out and he bought a property after he left my dealership. And I think he flipped that one and made, I don't know, $4 million or something. Crazy amount of money. And, so he was out doing his day job, which was selling training to car dealers like me. But then he was using the rest of his time to scout properties, right? And that's how he became a billionaire, not his training company. I think that made him a millionaire. But to go to billions, you have to own doors. You have to get into the real estate game. And that's what he did. And so he's my friend and my mentor. And of course, you guys know Elena's my partner at EXP. And, I'm learning from the best, right? And I want to take everything that I know and help you in this market. And if you're not in this market, I'm going to remove this now. So we'll go back here. Here we go. And if you're not in this market, I will get you with an expert in your market. So does anybody have any questions? Tell me, number one, I want to hear in the comments, like, what do you think about the slide presentation? Because it is a little easier, because hopefully you guys took some pictures of the slides and things like that. But tell me how you like the slides versus me just rambling off at you. Because I think this is such an important topic. I think it's something that we've got to be crystal clear on. I think, as Paige said, I think that we've got this moment in time where we've got the assets are heading down a bit. Don't freak out if you're a seller. The market's not crashing, but I think that we're seeing a market adjustment back to pre-COVID. And we all know what caused COVID, right? There was no inventory, or the COVID, the COVID price hikes. There was no inventory. The new home builders had quit building. So, that's 30 or 40% for all home buyers. And so with that being gone, it put an incredible amount of pressure on the resale market. So you have 40% of the new homes taken out of the market. You've got the resale market already contracting because people didn't want people going through their house, in the middle of a pandemic, rightfully so. So then what happens, right? So now you've got this, this many houses and this many buyers, because what were people doing? They were leaving New York. They were leaving California. They were leaving some of these, blue states, they were getting out. They were coming to Texas, right? So there was just so many things, the perfect storm, that pray to God that we don't ever see that again. But it was just the perfect storm. It was the perfect storm. So, I think it's just, it's getting our reality, it's getting our minds back to the reality that that we are back to a normal real estate market. We are in a hyperinflated market for sure, which is why your dollars are trash. Cash is trash. So you want to put that cash into an appreciating asset, a known entity. Going out and buying stock right now, it isn't the play. It's just not the play. The play is putting it into an appreciating asset, which is the only one I know of is real estate. Oh, good. Thank you, Megan. And thank you, Angie. I appreciate that. Okay. Does anybody have any questions? Anybody questions for me tonight? I will hold this open for a minute or two. I'm going to have somebody come on in the next couple of weeks. We're going to talk about, an expert. He owns a 1031 exchange company, right? So we're going to talk about the 1031 exchange, because it's really one of the best tax strategies out there, right? Like, why in the hell do you want to make all this money and then pay it back to the government? Not a good plan. So there are strategies in play to be able to not give it all back to the tax man. Okay. So we're going to have a 1031 exchange. We're going to bring on a real estate appraiser. I've got all kinds of guests lined up. I'm going to bring on a couple financial services people, right? People that I trust. They're not really wild about what I'm doing right now, but at the end of the day, I don't know if anybody can argue the fact that real estate is absolutely the safest bet. I mean, it's the safest and it's the most profitable. So for all of us ladies out there, if you look at the stats and it says we're holding on to cash, we're afraid to put it into investments, because we're nervous about it. Well, your cash is in more danger sitting in the bank, deflating. I don't know if that's the right word, but you know what I mean. It's losing value by the day. The government just prints more of it and just loses value, right? So versus, taking that cash, taking that IRA and putting it into a self-directed real estate IRA. You can do it at the bank, and then taking that money and using that as your down payment on a multifamily. When I say multifamily, it could be a duplex, a triplex, a fourplex, a 10-door, a 12-door. There's so many opportunities out there right now. I have a client that just asked about a 1031 exchange. Okay, good, Pam. Yeah, no, the 1031 exchange is absolutely, God, I don't know, about 3 months ago, every deal I did was a 1031 exchange, because all my investors were, and that's what you're going to see. Like, some of you, got my hat's all crooked. Some of you are going to have, here's kind of a learning tip. Some of you are going to have investors that are in single family properties, right? One doors. And now's the time they could sell them and parlay that money into multi-doors, even if it's a duplex, a triplex, a fourplex. They could do, if younger investors, they could do what we call house hacking. They could buy a fourplex, live in it for free, and then rent out the other three sides. Like, it is endless what you can do coming into this investment market. Now, are investment rates great? No, they're not great right now. Okay, but that's okay. The asset's on sale, and these rates are going to come down. You guys know what I say about rates. We're one war, one pandemic, or one president away from these rates dropping. And, So it's absolutely the best way to go. Okay, hold on, Paige. For short-term rentals, this is a great marketing company. Oh, thank you, Paige. Now, that's the only thing I would say I'm not a subject matter expert on is the short-term rentals. I know that there's a lot of people making a lot of money right now doing short-term rentals. I've sold a couple, but it's not the investment strategy that I personally use. I mean, I'm really about multi-doors, guys, really big time. And again, you may not want to be an active investor, right? Like this is my business. This is what I do every day. I'm an active investor, but maybe you want to be a passive investor, and I have a great fund that, I could introduce you to. So where you want to make 5 or 6% on an appreciating, in a fund, right? Maybe it's DIY. Maybe you said, I want to get into the house flipping business. This is what I want to do. I want to be like Tarek El Moussa. I want to flip houses. Like, you could not pay me enough to flip houses. I just want you guys to know that it's not my thing. But again, there's lots of people that like to do it. Okay. So you want to get into the house flipping business. We have a great real estate club through Cardone that I just joined, that I love, right? Because I want to play big. I want to play big in 2023. I think I told you guys we're working on a deal right now, a 225 door deal that I got brought in on through the real estate club. So, it just, again, you've got to expose yourself to it. You've got to commit to learn to it. And then you've got to have partners. Like, I think I'm as good as they get. And I hired Grant Cardone and his team for $25,000. And yes, I paid the freight. I've never asked for a discount, right? His knowledge is invaluable. But I paid that to be in this real estate club. Why? So that I could expose myself to more deals. I was in the club one day, and a guy that I met on the show when we were filming Real Estate King said, "Hey, you want to get in on this deal with us?" I looked at the deal. I'm like, yeah, hell yeah, I do. Okay. It's exposure, right? What are you going to expose yourself to? Who are you hanging out with? Like, if you're serious, again, if you're, a lot of you on this right now, you're on my team, you're in real estate, I get it. But if you happen to be just bumping on this and you're a friend of mine or a client of mine or somebody that I know through my social media, you've got to expose yourself to people who know the game, right? It isn't a part-time realtor. It isn't somebody who isn't playing the game themselves at a high level. You need to work with those of us who are playing the game. We're active investors. It's critical. So, all right, it does not look like we've got any questions tonight. And now, hold on, Pam. They have an investment property they paid cash for, and now wants to pull out equity and buy more property. Okay, here's a great, let me just tell you about this comment right here. Oop, not that one, this one. Let me tell you about this one. So on investment properties, you can pull out the equity and it's not a taxable event. Okay. I learned that in real estate school 101. So let's say I bought a duplex and I paid 300,000 for it, and now it's worth 500,000. I can take out up to 80% of 500,000. Okay. And I can take that money. I can go do anything I want with it. I could throw a great party. I can do whatever I want with it. But taking that cash out of that asset is not a taxable event. Now, because it's still mortgaged, right? And so you can take cash and somebody else, because the investment property is paying for it every single month, and you've got that cash to go do something else that you want to do with. So, Pam, tell them to take the cash because it is not a taxable event. So that's really a big deal in the investment world. All right, everybody. I'm going to peace out, and I'm glad we liked the slides. I'm glad, like I said, I'm going to have a lot more coming to you guys and gals. It's really important. We have an incredible opportunity right now. We have a better opportunity coming into 2023 than we ever had in 2022. I mean, my agent friends out here and the agents that are watching this, you pull up to a listing and you'd stand in line for a showing. All right. And it was not even a great listing. It's kind of like, meh. I'm like, why am I standing in line to show this junky house? Right. And so, anyways, so we have some really, really, let me get this back on here. So we have a really incredible opportunity right now. And let's just say that you're sitting out there and you're sitting on some single family dwellings. Let's, if you're my client or somebody in my market, let's get rid of them. Let's sell them, and let's repurpose that money into multi-doors. Builders are even going toward building multi-doors now, right? I mean, it's just going to be the new thing. And that's the way you're going to build generational wealth, because I'll leave it with this. A multi-door property like this triplex I just sold, it'll have two values assigned to it when my clients go to sell it in 5 years. One will be the cash value. It'll be it'll be what it's worth, just like the sticks and the bricks and the dirt and the comparable sales around it. But then it'll also have an investment value to it, right? It'll have a value assigned to it depending on how much it cash flowed, how much income. So your income on an appraisal, it's called the income approach. So it'll have an income approach. So, it might be worth $1 million, but because of the rents and the consistency of the rents, and because they've kept the property so nice, it was new construction, they got over market rents, which is what we'll be getting on this one. Now it's really worth $1 million too, right? We can sell it based on the rents, not just on the actual sticks and bricks. It's endless. It's endless. And I will let you guys know when our real estate tour goes out. We'll have our first one in January in Dallas. We kind of tied that one up today. Not sure quite on the date yet, but we're coming to Dallas, Houston, San Antonio, Austin, Miami. Elena and I talked about that today. We'll be doing something in Miami, definitely doing 2 of them in Chicago in 2023 because of one of our sponsors. But you want to come, and you want to come with bring your clients, bring yourself, because this is a big game that we have an opportunity to play. And I want to help every woman I know. And whether you buy from me or you don't buy from me, I want you to learn from me. So anyways, I hope you all have a great evening. Thank you for spending your evening with me. And I'll see you next week. Bye-bye.